Good evening. Welcome to the City Council Finance Committee for April 23rd, 2014. Let me begin with the roll call. Edwina Agee.
Here.
Alex Adams.
Here.
Ron Jackson.
Here.
Thank you.
No Tony?
Another.
Well, okay, but you're not just with, so you don't get called.
They'll be recorded in the minutes.
Okay.
Good evening, Mr. Bell.
Good evening.
So for our first item on the agenda is, the city has been placed on fiscal watch, and I wanted you to discuss in greater detail the placement on the fiscal watch of the city and this report that was given to all of the council members.
I was told that each of you had received a copy of the fiscal watch.
Yes, we do.
Okay, good, because I didn't make extra copies. Okay, what I had passed out to the committee, and Mayor, I'm sorry, my back is to you. Just the letter where they declared, you see a letter that I passed out just explaining the declaration and why they had placed us in fiscal watch. And the third paragraph pretty much says that it was because of the aggregate deficit of the $1,000,004, if you will. Is everyone along with me? And then also they looked at the overdue accounts and the capital improvement funds, and they found that they exceeded 1/12. So if it's more than 1/12 of the available revenue, and in this instance it was $43,450, the city was placed in fiscal watch. If it had been 1/6, then it would be emergency. So that's how the levels go in terms of the declaration. The city has 120 days to submit a plan, which would take us to August the 8th, I think, the 9th that I put on my sheet that I gave you. It's due August the 8th, which is 120 days from now. And we can go through the plan, the analysis that was set, but I would like to discuss the timeline first, if you don't mind. And so I just put some tentative dates. I have not cleared this with the mayor, but like I said, they're tentative, just to give me some focus in terms of a working schedule. So we had already agreed that after the levy, we would amend the budget. So the first item you see on there is the May 12th through May 30th, we need to work on amending the 2014 appropriation budget. For the month of June, we would actually work on the plan itself, which would incorporate this amended budget that we have submitted. The target is that on June 30th, this plan will be submitted to council for review. And then the first week in July, we would have meetings with council to discuss the plan and hopefully ratify the plan. My experience has been that we should submit the plan to the state at least a month before it's due. If we submit it on the 8th of August and they're rejected, they will immediately put the city into fiscal emergency. So my thought is that we will give it to them. If they have some questions, hopefully we can resolve them and get it back to them by the 8th. They're very firm on that line, on that deadline. So I did not want to butt right up against that date. So this is a tentative plan, open to your discussion, your review, your suggestions, or whatever, Mr. Chair, for going forward for the mayor in terms of the plan. But I think it's critical that we set some targets in terms of the dates and then try to adhere to those dates. Any questions so far about that?
Looking at the council review for the July 2nd through the 9th, do you think that will be adequate amount of time for the council to review this?
Well, we are on a tight schedule. It is the summertime, and I do recall that this body passed that they would recess at least the first meeting date. So my hope is that if I gave, if you received it on the 30th of June, that you would take, extra time to review it so that we can have a working session and discussion, and hopefully we could pass it. If we need 3 readings, where we have a week, and those dates could be moved, but we do have a month of leeway between July 9th and August the 8th. But like I say, we need to be very careful not to approach that August the 8th date, because if they reject the plan for whatever reason, we will immediately go into fiscal emergency. So I would at least like to give them a couple of weeks or so. It's summertime, they too will be on vacation, So that was the reason, but like I say, this is a tentative schedule, and it's up to this body, because it will have to be passed by the mayor and the council. So my hopes is that, once you review it on the 30th, you could propose whatever questions we could get together and go over whatever. That's also a holiday week, I know that too, but I just put it out for discussion, so.
Does any other committee members have questions?
Okay, it's a tight schedule, but, okay. Then if you would like, we could move it to the next agenda item, actually discussing the fiscal watch plan and whatever, analysis and whatever question you had. So if you take out your analysis. Okay, so there is a table of contents. And for the most part, I felt it was self-explanatory. Of course, I'm familiar reading this. I didn't know if we should start with whatever questions you had, or if you just want to go page by page, or...
Let's go page by page.
Okay. Did you bring your copy? The fiscal analysis. Okay, so the first page is basically the declaration where they cite the ORC in terms of the code, where they declared us to be in fiscal watch, which is pretty much what was in the letter that we had read in the beginning, and just summarized that in terms of their reasoning for putting us in fiscal emergency, watch. Ooh. Okay, on page 5, it actually started with the analysis. And again, it's just an introduction. The second paragraph, for the most part, says that there was 4 conditions in which they used to determine as a criteria for placing us in fiscal watch. 1 was significant past due accounts payable. The second one was substantial deficit balances in city funds. Then the sizable deficiency in the city's treasury balances compared to the positive cash balances of the city's funds, and a forecasted general fund deficit at the end of the current year, which means 2014, that exceeds 1/12 of the general fund revenue. So what all that says pretty much is that they looked at the bills that were outstanding and they felt that they were significant. They also compared the negative, the deficit fund balances to the positive cash balances, and they had some concern because of the ratio, which is the number 3, where they say a sizable deficit in the balance compared to the positive. And then also, based on what they had seen in the trend in spending, they projected that at the end of this year, which is 2014, that we would end up with a deficit. So based on that, they decided. So condition 1, they went into detail about past due accounts payable from the general funds and the other funds. And, as you read along, it just says that, accounts that were due and payable at the end of the fiscal year had been due and payable for at least 30 days. So anything that was over 30 days, they really considered that a negative in terms of considering this. And then also, it was that in the general fund and the respective special funds, They just felt that it exceeded 1/12 of the revenue. So for example, that we expect to have, say, $12,000 in revenue. If we have over $1,000 in unpaid bills, which is the 1/12, then they consider that a condition. If it had been, say, 900 versus the 1,000, then we would not have been. So that's how they use the 1/12 measure of the revenue, and then they take 1/12 of what they think is available. And so we exceed that in terms of bills, then it's an issue with them. And then they went on to say, which they did, when I first started at the end of January, they came in the door with me. They prepared a schedule of accounts payable as of December 31st that were due and payable, and that had been due and payable for at least 30 days, or to which a penalty had been added for failure to pay, including but not limited to final judgments, fringe benefits due and payable, and amounts due and payable to persons and other government entities and what have you. And so I think one of the things that they saw, there were some bills that went back to October that had not been paid. And then also, in terms of the fringe benefits, and I'm giving an example, like OP&F for the fire, or the pension for the staff, or health insurance, and those kinds of bills, if they were over 30 days, then that was a violation, because they expect those to be current, and current means within 30 days. Most bills that we receive are net 30. So we receive a bill on the first of the month, the expectation is that we pay it by the first of the next month. So that's why I say the rules are very stringent and tight in terms of how they assess this. On page 6, they went into the actual analysis. So for example, they say the general fund had payables over 30 days, 216,000. This is at the top of page 6. And they said the fund balance available. So in other words, according to their analysis, there was no money available to pay the 216,000. And then 1/12 of the available balance would be the 1 million. So in other words, the general fund revenue, I think is averaging, say, 13 million hypothetically. 1/12 of that is how they would have come up with the 1.154 million. That's the 1/12. So that's the money that they would have expected us to have to cover these bills, and it wasn't there. So therefore, the accounts payable was in excess of the available revenue. Then they just went on to describe below the accounts payable 30 days past due. So they had the general fund, which they detail above, and the ambulance building, capital improvement, those are like special funds. And it was the same analysis where they went through that to see if there was a deficit in those accounts, which they showed for capital improvement. So therefore, it was declared in violation of the ORC 118.022 that they stated. Any questions on the payables or how they arrived at our ability to pay those?
Regarding the payables, do you know what those payables were that were not paid?
In general, I can tell you, like I say, I know there was some payroll-related expenses. I know that waste management was one of those. And then just various vendors, I mean, you know, that we do business with on a day-to-day basis. And I don't have that listing, but just, I'm gonna make a presumption that it could have been like for the car repairs, or what we mostly deal with, or supplies, mortar, salt, those kinds of things. But I mean, in terms of a list, they did not give us an actual listing, and I did not go behind them to audit their work because of the time constraints. So pretty much we accepted what they had, because there was really no one here or information available to refute it or to say I disagree with this. So, okay, condition number 2, the deficit fund balance.
Could I ask a question? As of March 30th, how do we stand as far as bills that are over?
Okay, that's on our agenda.
Okay.
And if you indulge me, I'll get to that. Condition number 2, the deficit fund balance. And so again, they basically just talk about exceeding the 112. They just reiterating what they talked about at the top, where we're not allowed to exceed the 112 of the available funds to pay bills. And so on the top of page 7, they're saying that they computed the aggregate sum of all deficit funds by subtracting all accounts payable and encumbrances from the year-end cash fund balance. So in other words, there were actual bills that we had in-house, and there were also purchase orders, which are encumbrances that we had pledged or accrued. We may not have had the invoice, but we had purchased items like on credit and said that we would pay them, so they count that as a bill. Just like when you go in the store and you charge against your dealers or whatever, then even though you don't have the bill yet, it's still on your account that you owe that money. So this is basically what they're saying. These are like charges plus the actual bills that you received. So they just went ahead again and talked about the 112 aggregate, and then they identified the funds that may be transferred to meet such deficits to arrive at the unprovided portion. So basically what they're saying is that they also looked at funds where it could have been money that was miscoded, for example. Let's say that money was for the general fund, but inadvertently it may have been coded to, say, capital or street funds or something like that. So they went through and analyzed the revenue to see if that case existed where they could transfer the money back to the general fund. So they went through that process. So in the Schedule 3 that you see, it's basically the deficit fund balances that resulted from that analysis. So these are the funds that they show with the deficit. The first column, cash fund balances, and of course the general fund showed $1,000,003. Street lighting, police service levies, fire service levies, and the ambulance building did not have a deficit, but basically what they were doing, it didn't have a deficit at the beginning, but if you look at the very last column, all of these funds ended up with a deficit, so that's why they were included. And what you don't see are like the positive, because the city as a whole, if you add up all of the funds, there was a positive balance, but they don't use the bottom line. They go fund by fund to see who had deficit and who were in surplus. So what you do not see here are the funds that were positive. They look at the ones that's in a deficit and do that 1/12 rule to decide if it meets the criteria of being a fiscal watch. So these are all of the funds that ended up with the deficit. So as a conclusion, they say a fiscal watch condition exists under the section 118.022 of the ORC. And it's because they said it did exceed 1/12, that measurement that they were using of the general fund receipts and the receipts of respective deficit funds and funds. So in other words, where you see a deficit, if it was not anticipated that the revenue would come in to cover that, at least 12 times that, then it was a fiscal watch. So there may have been some deficit funds that did not qualify if there was a projection that there would be revenue eventually to come in to cover it, or transfers. Condition number 3, they talk about the treasury deficit deficiency, and so they say the existence of a condition in which at the end of the preceding fiscal year, monies and marketable investments. And when they say preceding fiscal year, they're talking about 2012, because this is done as of December 31st, 2013. So the preceding year would be 2012. So they basically said that they were held for the unsegregated treasury of the municipal corporation, county, so on and so forth, were less in amount than the aggregate of the positive. So what they're saying is that if you add up all the deficit funds, which they listed some, and then you add up all your positive funds, the deficit exceeded the positive. So that's why they say it's a treasury deficiency. And then they went on to say they verified the city's reconciliation of its bank balance to the cash balance for all the funds, as of December 31st, including the factors used to arrive at the treasury balance. Then they subtracted the aggregate sum of all of the positive balance. So like I say, every fund is not listed here. The ones with a positive balance were not listed on page 7. They took that, and then they subtracted that from the unsegregated treasury to determine the deficit. So again, like I say, they're taking the positive numbers and comparing them to the negative, and see if it meets that 1/12 measurement. Okay, on page 8, they basically outlined, and this is what I was saying, if you look at the total bottom line, there's $961,000 in the bank total for the year. They listed all the different accounts that the city has. And then they subtracted out the positive fund balances, which is that list below it. And that's why I was saying that every fund was not listed in terms of that. The total positive cash fund balance was $2,000,008. When they subtracted that from the cash of the $961, then they had the negative $1.8 million. And then 1/12 of that, treasury receipts, was the $1,000,008 positive, so they had the deficit of $16,000. So they basically just showed you how they calculated their deficit. So in other words, the fund balance, and the fund balance includes the actual bills and the purchase orders and encumbrances, so that's why that number is so high. And it exceeded, so basically what they're saying, that if you want to pay every bill that you had on hand, and also pay any that you had incurred or charged, like purchase orders, you would not have had enough to pay all those. Page 9. So the conclusion is that the fiscal watch condition does exist based on, we're talking about the positive balance compared to that 1/12 of the receipts of the year. Condition 4, based on an examination of the financial forecast approved by the legislative authority, so on and so forth, at the end of the current year, again, they projected that it will exceed 1/12 of the general fund revenue. So basically, if we project again, say $12 million, they're projecting that our deficit will be more than 1/12 of that, more than $1 million. So based on that, but like I said, if the deficit had come in at 900,000, then it would not have exceeded the 1/12. So that pretty much takes us to the last page, which is just the clerk's certification saying that they certified this report. So this completes the analysis for the Declaration of the Fiscal Watch. And it's a lot of numbers, and I know that, but if you sit and read it and I guess go over it, you'll sort of see how the forms work together.
So, Finance Inspector, we have 2 more audits coming. We have the gap audit and there's one other audit. And when can we anticipate receiving those audits?
Okay, the audits, there is not a scheduled audit for the year ended 2013. The city is on a biennium every 2 years. So the next audit, according to the contract that the city has, will be performed in 2015 for 13 and 14.
What about the gap audit?
The gap audit, it's due to be completed. Originally, the due date was May 30th. The state asked us to extend it 60 days, and in fact, we sent a letter out today extending it until July 30th. They needed more time and then, we delayed with preparing this analysis, so they weren't able to come in and start on the 2013 work, I think. And they probably use a lot of this in the gap audit. This is sort of like, a start for them, this analysis.
Well, could you repeat that date for that cap on?
It's been extended to July 30th.
So my question is, the city's been placing fiscal watch. With your experiences, you've worked in other municipalities with similar financial situations. What have you done? What has the city done in terms of response to fiscal watch, in terms of a plan?
Well, the biggest plan is controlling the expenses. The staff, including, the economic director and the mayor's secretary and the staff, the payroll clerk, myself, and the tax administrator, we have worked, and I think we really have corralled all of the outstanding bills. We've checked to make sure, I think there's one from 2013, but there's an issue with that. We've assured that we paid all the 2013 bills. We're actually, and like I said, it's on here, the ones that's in terms of aging, which is past the 2013, that we're really, for the most part, paying the bills within 45 days. And so the procedures we have put in place, like the purchase orders, that was the biggest thing, and even knowing how much we owe or how much we had spent. So the staff has been, we've had meetings, they've been trained that we have to have a purchase rate approved, not just submitting one, and a purchase order before we start spending. And that has really helped us to curb this year. So the first thing was to stop the bleeding. It's not anything we could do about 2013, it was gone. But we are putting procedures in place, which I commend the staff, the directors in the city for, their participation, assistance, and cooperation in assuring that we stay within the budgets and what have you. So that has been the biggest measure that we've taken to get towards the end. And once we get to that point, then, we can start, just to assure that we don't increase the deficit. That's the biggest thing, not to increase the current deficit that we have and to try to lower it down some. But in the plan, when we actually do the plan, we'll have to include a plan to show every year. And usually it's a 5-year plan, but it would behoove us to try to do it within 2 or 3 years because they start charging for their services after that. To try to, in other words, say put away whatever that deficit. So hypothetically, if the deficit is $1.3 million, we could save, say, $400,000, $500,000 for the next 3 years to go towards that, which means underspend whatever our budget is. That would go a long ways towards moving us out of this position.
Does anyone have any questions? Alex?
Now, before we go into, they put us into emergency. You know the figures, so you know right now you're taking steps to close the gap. We're not going to be able to close the gap in 2014.
Well, it'll be hard to make up $1 million. To run the operations and save. In other words, it's a savings. So if you can think that we're getting, say, $12 million in, that we're going to save $1 million of that, that would be a very, a challenge. And that would not be their expectation. Their expectation, again, they're using this measurement that we have to stay under that 112. And, now that we're getting good numbers, we can do the calculation ourselves, because once you get the 1/6, then you go into fiscal emergency. So the plan is to submit a plan so that we show that we are not increasing the deficit, but it's not just a matter of not increasing it. It has to be that ratio that we stay 1/12 under what we expect to receive in revenue.
You were expecting 18 or 19 million.
Well, that's total, which includes grants and stuff like that. But we'll have a better number when we do the amendment, because then we'll know if there's additional grants. Like today, we signed a contract with the DARE. It's small, but it's a moving target, very liquid and fluid. So hopefully by now we'll have a sense based on the first quarter of what our spending trends and what our real needs are. And then also we can curtail that. So it's going to be a challenge. It may not be a very simple process, but I think if we work together, which we are. And to working together means, you know, the council, the residents, because their needs are dependent upon how much money we get in. So you have to balance too, like what can we do and what can't we do? It's just like being at home. So, you know, when you have to curtail, you may not be able to eat steak every day, you may eat it once a month. And the same with the city services. Some services that you're accustomed to may not be provided as frequent, or you may have to deliver them in a different way. So that's what I'm saying, it's gonna take all of us. It's just not a finance director or mayor's thing, it's council and the residents all making the decision that we can live within this budget and we can do without this, or, you know, we can compromise. So it's, you know.
So the 1,000,004 deficit here, we're starting to get that down, you said. We're starting to bring it down. Now, if the residents helps us out and improves the income tax, and that would bring us possibly 1.8 million, that would bring us down to a level where in 2 years we could balance the budget.
Well, it's two-pronged. We have to, first of all, eliminate the deficit we started in with. Then we have to assure that we do not create a deficit for this year. And I can't say now that what impact that will have until once we see what happens, and also what other services that we may be able to. I mean, I've been trying to negotiate contracts, reduce different contracts that we have. So all of that plays a part. At this point, we can't just say the plan will look like this or like that. We really have to sit down, roll up our sleeves and work on it. And, you know, staff is transitioning, we have people coming and going, what have you. So, you know, when everything's settled, then we can see just what we will forecast.
But the tax itself would help us with the basic services.
Well, I'll let the mayor make that decision, but just in logic, at least it will cover the deficit that we started the year with. At least it would do that. But I'm not saying how, you know, the mayor plans to use it per se. But that will at least try to eliminate some of what you see in this report with the deficit that started. So if that's the case, then that's approved by this body, the mayor, and what have you. Then we just need to make sure this year is on target.
And with the cut of the health care, 400,000 was said, figure out. With that savings starting this year, should give us a pretty good jump.
Well, yes, but you know, being realistic, you'll see a lot of this next year. It's like we're planting the seed this year, the harvest will reap next year. Right, so, you know, it's not like we'll get the whole entire 400 this year. But then next year, we have a full year, then we really should be able to see the fruits of our labor from this year.
Thank you.
Does anyone have any other questions?
I have a question. We only have 3 outstanding invoices over 60 days.
Well, yes, over 60 days, like I say, there's a couple that's over 120 days.
Yeah, I'm saying over 60
Yeah.
days, 60, 120.
Right, I tried to group them, so for 60 days, we had, you know, like I say, purposely, we're holding that, because we really haven't been spending. I mean, the directors really have not been spending. For the most part, all we've spent are payroll and the associated benefits that go along with payroll and emergencies, you know, like if stoplights go out, stuff like that. But there's been a lot of non-spending. They really have been holding the belt real tight.
So, Finance Director, I see that there's more than salt, Carvo paving, and the job creation and retention grants. I understand that earlier we were behind with waste management and the utilities.
We've caught up. Like I say, with the utilities and those bills, we have basically pretty much caught up within like 30 days, maybe 40 days, but they're not months behind. So, and I can tell because my phone has stopped ringing hardly any, before it was ringing every half a second. So that's a good sign. But no, we've been working, like I say, very hard to organize this. And that was the biggest job. First of all, knowing what did we owe. That was one of the first things that we had to find out, because bills were coming in that we really had no control or knew about because there was no associated purchase order. But now that we're doing everything by purchase orders, then we know exactly what we're, authorizing for expenditures and those kinds of things. But to answer your question, Councilwoman AG, yes, there's those 3 grants that's over they're about 60 days. They go back to, I think, February or sometime. And then we have these other 2, which I understand have some special circumstances surrounding them, which were there when I came. So I don't have all of the details. But they go back maybe to the first of the year, the end of the year. And all our other bills pretty much are like 45 days to 30 days, which I see as current. I mean, even our health benefits, we paid like through March, for our health and life and all of those. So we're pretty good on our bills.
So do you have a number of how many you're behind in roughly 30 to 45 days?
What would be the difference between 181, I didn't add it up, pretty much, what's that, 70, 100. So this is not including the fringes. When I say fringes, I mean like OP and F and those. These are vendor invoices. So probably about 80,000 of the 45 to 30 days or less. And then of course, like I say, we have our April health care bills to pay.
On the other side of that ledger, as far as income, is there anybody who owes us money? Try to get in that they're behind us.
There's a couple, in fact, we received a nice check today. There's checks associated with the ODOT and those companies working on the roads, like where we have grants, but we have to expend the money and then they pay us back, we put the money out. So we have a couple of those that working with the engineer, and I just can't give you a number, but I know we did receive like a $46,000 check today where we paid the money, and it was about $60,000, and then we got 40-some back. So we have that kind of, transactions going on where we may have a small match or something of that nature. So, but like I say, pretty much we are on top of the bills and all, so we're feeling real good about that. And so we're at a point now where we really can see how to move forward these last few months, and that's why, and I thank you for your indulgence. We just really had to find out what do we owe, who do we owe, and a lot of times we didn't know until I got the phone call. They said, well, you owe a bill from October, this or that, but there was nothing to tell me then until I saw the bill. So that's why we sort of stopped spending. Then all of that, as I had said before, flushed through by end of February, 1st of March, because usually bills within 60 days they show surface. So after February, we could pretty much say, for the most part, that all of the bills from last year had come in. And we knew what was happening for 14 because we put controls in place with the purchase orders and those. So.
One more time, I didn't mark it down, so
What page are you on?
I want to make sure I get it right.
Which page are you looking at?
I'm looking at page 8.
The date?
Yes. The treasury deficit. 1,883,000. And you said that you're working on getting this deficit down, and we do have some positives. So the deficit would actually be 1 million, 1.4. What is actually the deficit
For 2013 or for now?
going into this year? Yes.
It's probably slightly under this. If you look at your agenda, if I may jump down to number 4, where you can see that we're underspending the budget. It doesn't seem like much, but that's $121,000. And that's like for first quarter. It's on the agenda, number 4. So I'm just saying that that is going towards working down that 1.8, that you will see here. Because what this says is that we have spent less than we had budgeted this year, plus have a savings. And if you remember, one of the things I said is that we need a savings to work against this deficit. So, we keep saving monies, as we go along, then it will work against that 1.8.
Yeah, I'm trying to get my head into a maybe situation.
Well, let me just
Taxes
say,
passed.
yeah, like I said, the 1.8 is there, so it is there. So what we can do is control our spending for this year and hopefully underspend, because that underspending will go against the 1.8.
Yes.
I mean, I can't tell you what that is right now, but I'm just saying right now, to date, we've underspent $121,000.
And looking at it with the 1.8 for 2013, without much work put into savings. We didn't really get into it earlier, which we should have, but we know we should. But with us watching now, my mind's thinking, we're not going to come near another 1.8, so we're not going to reach a deficit of $3 million for the end of 2014.
If we watch our spending, you're correct. So, but keep in mind, and I can't answer this because I have not read all the audits past, the 1.8 that you're seeing, I'm not sure that's the deficit just for the year 2013. This is an accumulative deficit. So, I would have to go back and look at 11 and 10 and 12 to see if they ended in a deficit. But keep in mind that this is a deficit from the day the city started till this point, December 31st. Now, it's possible that it was all in 2013, but I can't stand here and say that.
No,
But this is a deficit from the day you opened the city,
when we started to go into minus,
Well,
around 2010. Yeah.
Okay, right, and like I say, I don't have all the audit reviews to say that for a fact, but I do know it is a deficit as of this date, not for this date, which is a difference. It's not necessarily for 2013, but as of 2013.
Well, numbers was out, 3 million, 4 million, 5 million, scared the death out of me,
Yeah.
So
Well-
now with the thinking, and hopefully they pass the income tax, we'll be pretty good with all the directors and everybody on board.
And the
Keep making these
residents.
savings.
Right.
Yeah.
Right, and like I say, it takes all of us. It's not just a plan that I can write, There's a plan that we all have to get together and agree upon.
Increase.
Exactly. Well, we will police it. We're doing that. You can ask the directors, they'll tell you. I don't, the grief that they get when they're trying to get money.